So what you need to remember here is that markets don't work in isolation. They are, at the end of the day, a reflection of the economy, the underlying economy. So if the economy itself is going to be cyclical, the markets are going to be cyclical. They are bound to be cyclical in the near term. And when you think of that, you would probably start paying attention to some risks and upsides that most investors out there are overlooking. Now, over the past, couple of months, markets have been extremely buoyant. But even if the next 12 months of 2025 do not fetch the kind of returns you are expecting, so what? As long as the structural upsides are intact for the economy. What kind of subsides am I talking about? Well, take the mega trends. We typically assume that certain sectors like infrastructure, banking, and consumption have the biggest influence on the GDP growth. But then the mega trends in sectors like healthcare, technology, and green energy, and even defense have now begun contributing a meaningful part of India's GDP, and they will continue to be the big growth drivers over the next couple of decades. Then there's manufacturing. Here, the biggest structural positive is the focus on Industry 2.0 as a key milestone in India's economic evolution. We are no longer looking at becoming contract manufacturers. Rather, MNCs from countries like the US, Japan, Korea, even Germany are looking, and the ones with a huge technological advantage are looking to partner with Indian companies to set up their own manufacturing hubs here. Plus, the production-linked incentive schemes, favorable policies for production of semiconductors and electronics, and the indigenization of defense have all helped in making manufacturing an important structural tailwind for India. But I think the biggest positive, long-term positive for India has been the massive proliferation of innovative startups and their ability to access the Indian capital markets. Of course, startup investing is not for everybody, and I do not recommend investing in the startup IPOs to everyone, no matter what the fundamentals are. But the very fact that some of the most innovative and successful startups are creating wealth in Indian capital markets is a huge positive for a country like ours that is banking big on the innovation from startups. And finally, we come to the structural positive that is literally holding up Indian stock markets even now in the volatile times. The rise of the Indian stock market investor. The number of demat accounts in the country have grown fourfold in the past 4 years. The number of registered SIPs in the country have grown fivefold in the past 4 years. But despite that, India's share of stock market investors compared to China and especially the US is still very small, which means there's a lot of headroom for growth here.